How's it going, everyone? We've reached another dividend milestone video, and what has truly been, shall I say, not a great start for the markets in 2022. But first, as always, welcome back to Continues to Tick. So friends, question: how easy do you fall? How easy do you fall? If something in your day, your life, your vision, your desires came in and said, nope, not today, how would you react? Would you trip, stumble, and fall? Or would you trip, stumble, and gather, recover, restructure, reanalyze, not quit? You see, if life were easy, if reaching our full potential were easy, we'd all be abnormal. And by that I mean we'd all not be average, but by default, given just by the visualization of the world around us, the one we all live in, the majority stay average. Average plans, average wealth, average goals, average life. If anything, the majority sway below average even, then above it. Because a fact about chasing our high-ending goals, dreams beyond imagination, and ambitions only saved for those that see them through, comes the biggest height to fall from, the biggest risks, the most to lose. But reverse that. Reverse that. Don't see it this way. That is not true. That is your mind lying to you. Our mind is often lying to us, and I catch it all the time now, trying to keep us safe and comfortable, telling us all these false narratives, these false internal dialogues, because the truth is actually, not doing has the biggest consequence. Inaction is the biggest loss, followed closely by regret. Our mind shields us from these things until they actually are a reality, once it is too late to change, once it actually is regretful. Don't do it. Don't stay stagnant. And worse, accept it. In that reality, you're pouring cement on your life today with the imprint of how it stands right now to show it off for the rest of your life. You're tapping out now to watch others. If you see what you want, you know what it looks like. You can do it too. Tell yourself this instead. Because in that prior scenario, if you tap out today, you're done from here. You must be very happy with your life and situation to be done from right here. So let me step back and rephrase, friends. Do you want to be average and risk nothing, not a scrape on your body, your ego? Or would you give it all to not be average and reach heights you didn't even think you were capable of? Because not trying to exceed and excel is cut from the same cloth as reaching the top and having it be easy. A sweet stroll all the way to the top. What's the point of reaching the top if it was easy? What satisfaction do you even garner from that? No one would listen to that story. No one cares about that story. Why would they? The struggle, the internal dialogue in our head will always be a struggle we face, coming out harder from the woodworks when we trip and stumble, no matter what the exterior world shows us, with true vision. What is your internal dialogue telling you right now? Turn back, Jesse. This dividend portfolio isn't worth it. Stop working out daily, Jesse. You're looking a bit better, but the progress is too slow. You're still too skinny. It's not worth it, Jesse. You don't have energy for any more compassion. You had a long day. Just start selling your investments today, Jesse. Why wait longer for any rewards? No, 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 no. You need to be stronger than your thoughts. You need to be stronger than your struggle. You need to be stronger than your stumbles. You need to be stronger than your trips. We will not fall. We will gather and recover. We will not quit. We cannot be stopped. We will not be stopped. Our consistency will stand the test of time, and our conquered minds in the meanwhile will show us our true vision, the actual results we're striving for. This way, by the time we reach them, it won't be a surprise. I don't believe in luck. I don't want anything I do in this life to be lucky. Just hard work and dedication. the same should be for you. Become so undeniable, our minds can no longer lie to us. That's where I'm headed. Now, just imagine where you'd be if you simply didn't stop. One word we should all be saying to our own minds in exchange to their false narratives: watch. So time for a short break, yeah? A little mental break. A break to say if you've enjoyed this series, you can always subscribe. And just know it isn't stopping anytime soon. I'm working up the courage to say never, but it's a process. And I'm working on making my word believable. But as for a mind cleanser this week, how about a picture of my Bubbas? Dogs, man. The best. Alrighty, y'all. So finally it took a while, but we made it to yet another milestone video. But that is kind of how it happens. Stay consistent with the plan on the background and let time pass. And milestone videos will become inevitable. They will happen. And the great thing about a dividend portfolio is we aren't all about capital appreciation because, well, there isn't much of that going on, unfortunately. If anything, it's more like capital depreciation. Okay, left field a bit, but maybe most of us are actually dividend investors here anyway, and that sentence doesn't hurt as much as we continue to get paid and make money on the dividends. But long story to say, we've now reached the mark of getting paid $1,500 a year in dividends. And some may say, well, Jesse, that isn't that much. Well, probably true, but I'd take a $1,500 raise in my yearly salary any day, and especially in a bonus. But truly, a journey has continued a step at a time. Just keep at it. One day, I guarantee you, it'll be $1,500, not a year, but a month. But just as with all my milestone videos, I'll briefly go over my normal stats for my last week's performance. Then, as we always do, I'll go more in depth than normal. I'll break down my goal with this portfolio, my strategy, my sector allocations, the number of holdings in my portfolio, my current portfolio's dividend yield, and of course, last but not least, evidence that my portfolio now pays me $1,500 in passive income every year. So despite the market downfall, we continue to stay in stride. Currently in the Jesse's Cash Flow portfolio, sitting at $53,123.14. And looking a bit closer here, our portfolio remains in the green of 18.03%, which equates for a total gain of $4,337.64. For market gain alone, we've dropped down to a gain of $2,861.57. And from earned dividends, we're at a total now of $1,476.07. And of course, this was on the all-time charts, but now going to the past week's performance. As you can see here, not great. There's still the active hemorrhage, as we lost 1.79% of the portfolio this last week, which equated to a loss of $964.46. So in saying that, we'll quickly get out of this bad news area, and we'll go into the dividend activity section here, which is the part ultimately that matters when you are a dividend investor. And when it comes to getting paid dividends, we got paid a few this last week, starting with Alliant Energy Core on May 16th, getting paid $4.38, and then getting paid by Procter & Gamble also on the same day, $6.69. And then here we are on May 18th with our systematic deposit that happens every single week of $500, and also on the same day, we had the funneling back into the portfolio with a $19.23 snowball. I'll take that. No complaints from me. So if you've been here for a while, you know my goal with this portfolio is to assist me with funding what I hope to be a fat retirement at the start of age 50. If all my stars align, I'll be able to retire around the age of 50 with the state of California, with the state pension, and in addition, utilize the funds of this portfolio to help me fat fire, if you will. I personally think a retirement age of 50 is early. Not many people I know retire at that age, but my back-end goal is to also have a multi-million-dollar dividend portfolio, which will soon be this Jesse's Cash Flow portfolio, by that same age. So let's see over time what happens if we simply don't stop. As for my strategy, it hasn't changed since the beginning of this portfolio. The same stocks I had at the beginning, I still have today. My strategy is to not sell, or not sell often. I did a lot of upfront research when I first started this portfolio, and I wanted to avoid selling as much as possible, as I believe it creates a mindset of trying to outsmart the markets, which is quite difficult. And although I have my reasons on why I would sell a holding, I haven't had to yet. And I guess it's also important to say, I started this portfolio on July 20th of 2020 for those that don't happen to know. But given that my portfolio is set, all I do now is fund it. Every single week, $500, and that hasn't changed since July 20th of 2020. That is my most critical part. Ultimately, I want to show the example that we don't need to sprint to the finish line, that just by remaining consistent with the weekly funding of the portfolio will make our goal over time, allowing time to simply pass. And you may be asking what I do to fund at this rate. Well, that is another part of my overall plan. I got a great career going as a registered nurse. Believe me when I say it's all a network with systematic goals along the way. You need one to do the other. Maybe I can go over all of that one day if there's interest, but I wouldn't be able to fund my portfolio at this rate without a solid foundation built first. This has all been the cultivation of years of work to get to this point, way prior to July 20th of 2020. And just before I go into my sector allocations here, just know if you're curious and want to take a look at my portfolio on your own time, go ahead and look in the description box for the link to sharing my pie down below, which M1 so easily allows. And when it comes to the sectors here, I arranged these at the very beginning, and again haven't changed them, if at all. But here we are starting with real estate, my highest set sector allocation of 13%. And then here we are on consumer staples of 12%, followed by utilities, ETF, index fund, and tech, also at 10%. And then here we are at financials at 9%, followed by industrials at 8%, and then healthcare at 7%, followed by communications at 5%, energy at 3%, materials at 2%, and then last but not least, consumer discretionary, which we can just go ahead and click on because it's only one holding in there, and it's my McDonald's. But as mentioned earlier, if you click on the link to sharing my pie, we can click on tech, for example, the sector here, and you can see all the holdings that I have in this particular sector, along with their target percentage, along with their value in my portfolio. And as we continue forward on this milestone video here, you can see that here we are now in the research tab on M1, going into more of the statistics of my Jesse's cash flow portfolio. Here we are on the profile. As you can see, I do have 51 holdings. And as I've said before, I've had 51 since the beginning. But the way I view it, it's almost like being, a young adolescent child. You buy him a bigger pair of shoes. The idea is he'll eventually grow into them and fit them. And that's kind of my idea with this portfolio. I did start at the beginning with 51 holdings, and maybe even now it's still quite a bit for $53,000 of value. But the idea is, like I mentioned, I hope this to be a multi-million-dollar dividend portfolio someday. And in that process, my portfolio will continue to grow. It'll continue to grow into these 51 holdings. And that is my strategy. And I'm curious to see how it plays out, as I don't think many of us have been on YouTube long enough to see it play out. All we do is hear stories of, dividend investors in the past, but I'm trying to play this out myself, and we'll see it here over time. So stick around if you're curious to see it play out also. And as for my portfolio's dividend yield, as you can see here, it's 2.785%, which if you've watched my previous milestone videos, it's actually been around 2.6%. So it's interesting to see that as the markets actually continue to take a decline, my dividends yield actually has been increasing, which is actually a good thing to see, and I'm all for it. That's how it should be. And as for my expense ratio, it has typically been 0.01%, but with inflation and everything going up, I guess I'm not too surprised it's now at 0.02%. But that is just the market and the world we currently live in. And now making way into the dividend tracker app. As you can see here, we're on the Jesse's cash flow portfolio, but also now on the Div Tracker app. If you look at the composition here, you can see just a couple statistics. You can see that my VIG is 10.8% of my portfolio, and then SPYD follows at 9.1%, followed by O at 3.5%. And following O, everything else is 3% or lower. And just to show you my receipt here, you can see that my annual dividend income for this portfolio is $1,525.80. And if you break it down on a monthly basis, it's $127.15. And then if you break it down to the daily, it's $4.18. And as you can see here, there's a little bit of a discrepancy on the dividend yield. Earlier on my M1, I showed you we were at 2.7, about 2.7%. And here on the Div Tracker, we're at 3.04%. And there typically always is some sort of discrepancy between the Div Tracker and M1. But the way I tend to view it is that it must be somewhere in between. And I'm comfortable with that. And so that's going to be it for this week's video. A little bit more of a lengthy video, a little bit more of an in-depth video, but that is how my milestone videos go. And although the markets continue to decline, as we're all experiencing right now, progress continues to be made, I would say, for the majority of us as dividend investors. as this is why we invested for dividends to begin with, when our portfolios shine. And let's be proud of that. Let's take advantage of that moment. And also, if you have some extra cash, buy some stocks on sale. It's always a good time. And enough with the ramble. We've made it through 7 days. And because of that, we have a high chance of making it through another 7. And as always, I'll be here. And as always, take care.